Hey, good morning, everyone. Hope everybody's doing really well this Monday morning. Hope you all had an exciting, fun, and safe weekend. Here we are, another day, another beautiful day. Good morning, Julie. Good morning, Jim, Tom, John, Ed. That's all the names I can see. Alrighty, let's just hit the road with negative futures here. How about that? Hello, JW. Good morning, Jan. So let's try to stay away from predicting, and let's just simply follow the trend and realize that at every trend change, we always have a warning. We always have a chart pattern, always a group of candles that gives us that warning. To the downside, an example, we've got this evening star up here. Here, this reverse back up, we've got a doji gap up or a morning star set up. Here we have a grouping of candles with a bullish Hiromi and follow through. At the top here, we've got a high wick, which we're going to call that a shooting star, and we had follow through to the downside. So at every turn, there's maybe I shouldn't say every, 99.9%, that gives us one little out. 99.9%, there's always a telltale sign. So as I'm looking at this, this weekend I started making a watch list, and I changed it 100 times. It very made my mind hurt, because I love being long. I do. But I'm having difficulty seeing that right now. So we're going to look at, there's a couple longs in here, but mostly short trade setup. And if we just simply follow the trend until the trend changes. So here we are down below the T line. By the way, the trend I'm going to use is combination of the Trendicator and the T line. What is price doing in relationship with what we call the Trendicator, which everybody knows it's nothing more than the 17 exponential moving average. We just figured out a trick way to turn it into red and green dots, or buying dots, selling dots, if you will. So anytime price is below those moving averages, it is just insane for me to be long. In fact, if I get long on something like this and I can't justify it worthy of, explaining to somebody, please reach through this microphone and just slap me in the head. This is the time to be short, not long. This is not the time to be picking reversals. I think we should wait till those reversals are actually established. So, with that, you can clearly see the SPY is moving to the downside. Oh yeah, I wanted to mention this too, because I've been questioned on this a couple times, and I thank you, by the way, Gabriel. But I do want to explain myself. I call the SPY my market. It's because it is my market. However, it might Chubb, Dick, Dan, Jan, JW, Jim, Julie, all up there in the trade room. That may not be your market, but that is my market. It's the S&P 500 is a broad index of just about everything, and I use the SPY rather than looking at the SPX, but it ends up being the same thing. So for me personally, yeah, it's my market. Like I said, it has a little bit of everything, and that's what I want. That's what I want to see for the overall. So true, while the market is truly everything, this is my market, and every trader has that right to choose the tools they want to use and choose the tools how they want to use them. Okay, so anyway, thanks, Gabriel. All right, so let's take a look at some trades here. MMC is looking like a short. You can get rid of that right there. You can see here that we have a trend that's been running up right here, and now the trend has been broken. Boom. We're below the 50 period moving average, and that's very important for me for shorting or even going long. When there's charts too far above the 50 period moving average, so let's say we travel up here and then put in a sell signal, then I do look for shorts coming back to the 50. But at the 50, game's over until we can break through. Just, one of the things I look for in trading. So while here we're above that 50 period moving average, you can see we've broken down now. Price is below the T-line. T-line is below the Trendicator. You see the red dots telling us not to buy anything. Don't buy anything. Don't buy this chart. Stay short. So the place we want to look for short, we like doing things like this right here. This puts it in a type of a trap, or maybe the 3/8 trap. That's what we're looking for. And then we're looking for targets to the downside. Now, I'm a big moving average user, so I'm always going to put targets near the dotted deuce and the 200 period moving average. And you can see the 200 comes awfully close to those lows. These targets don't mean that price has to get exactly to 150.31. We're going to follow price is what we're going to do. Jim is asking, Rick, let's see, the blue line. Yeah, this blue dotted line, yes, sir, that's the 50 period moving average. Yes, sir. So anyway, nice little short working here. If we get down to 157.55, we're flirting around with these tops in here. We'll see what price does. We could definitely drop lower on this market. DG is actually a long chart, and it looks like it's even working out this morning. I think what I'm going to do is come up here and put that line at these tops. If we can get a breakout and hold up there, then that might be a reasonable trade. When you think about Dollar General here, it's a defensive sector, so if it makes sense that retail stores like this might be doing pretty well if we're seeing this inflation thing going on, and it's real, it's there. So a lot of these type of defensive type stocks might pan out pretty good while that inflation continues to lay in there with us. JNJ is another bullish chart. So here's the thing, okay? I've got some bullish charts out here because it's bullish. To me, I want to take the easy road. And the easy road is when the market is bullish, trade bullish. When the market is bearish, trade bearish. Trying to fight the other way, it can work. I'm not saying it can't, but you have to be in the right stocks for that. Like that Dollar General, for instance. I think that is one of the right stocks to be long based on inflation fears. JNJ, the JNJs, the Pfizers, these drug companies, they seem to be doing pretty good. Why? Because of COVID. So sometimes in that down market, we can play to the long side. But I do think our rules have to be absolute, and we have to stick with them. So take JNJ here. We've got a J-hook continuation pattern setting up. We have a possible swing target up here to this 179.80 area, this August highs up here. So if it was to be bought and you are a short-term swing trader, then it makes absolutely no sense in the world. I don't care what is coming out. I don't care, what the future might bring. If you decide you are a short-term swing trader, stick with that. If you are going to be a long-term investor, stick with that. Don't mix the two. The two don't mix very well at all. Don't go into this, I'm going to be a short-term swing trader, but if it goes down, I'll just become an investor. Bad habit to get into. So, short-term swing trader, if this thing doesn't work, get out of it. Don't mess with it. Don't play with it. Give it very little room to work. While we can't predict that if we buy it, it's going to start going up right away. We like that idea, but we can't guarantee that's going to happen. We buy things and sometimes they rattle around for a little bit. They want to rattle around for a little bit, that's okay. But if their rattle means going below your stop, well, that chart is not doing what you want it to do. My number one 2022 goal is to keep my losses at an absolute minimum. Now, I don't know about anybody else, but I've gone through and done a little bit of work and realized why I didn't make as much money as I wanted to. I had some great winners. Nothing wrong with my winners. I just had some losers that killed them because I didn't have the God-given sense to get out of them. So my 2022 goal is if it doesn't work, don't be there. Don't be there. Diamonds are looking a little to the short side. So here's a case where we're above that 50-period moving average. We've got a short signal up here. We have follow-through. I'm looking for the diamonds to get to that 50-period moving average. We also have a little gap right in here it might want to get into, and that's just ever so slightly below the 50. So this could definitely be a short to here. Reevaluate or make sure you keep your stop in because nothing says that it can't come on down here closer to that 200-period moving average. The only way to be long is if it turned the corner and came back up right here. FCX, I've got this on my chart, just kind of watching it. Copper may be a good thing going forward, but it doesn't mean that it's a good thing going forward today. So I am going to keep this on my watch list. I would like to get into it. I'm going to wait till the best buy signal that I can come up with at the time. Right now, it is not it. If I saw something like this today, if today it turned around and popped up, I might nibble. And it's going to have to close there today. Where I will add a bigger chunk is if we break out. Then I will add more to it. It's possible there's a nibble there, only if those bulls show some interest in here. This is a shooting star. Currently, we have follow of that shooting star. It is also a 3/8 trap right now. Here's a short GameStop, for anyone that wants to short GameStop. For those of you that have the ability to put the red and green on your chart here, over the last few years, this actually isn't that old for us, but it's been there 3-4 years now, 3 years anyway. I've heard back from an awful lot of people how this has just turned their trading around because they have a very simple rule. If they are in, say, this particular chart, and I can see why somebody might want to be in it, set aside that it's GameStop, that's a killer right there. But if somebody is, I see what they're doing. I see that chart pattern. Not all chart patterns work out. You can see it went sideways. And see how we went from the bullish green dots to the bearish red dots. I've heard back that has saved so many people heartache just following the red and green. Red means go, red means don't go, or short if you want. And we're still red here. As many times as this thing, there's a great bullish candle that rallied up a little bit, could have been a little bit of a swing trade, but it went nowhere. And here we are back down. Here's that almighty double bottom that means absolutely nothing unless you get follow through. Follow through would be a double bottom. This is our downtrend. It would need to break out and test. So anyway, game is a little bit of a short. Facebook. If Facebook can break through these lows, that sounds like a song. These lows. If break through 322.42 here, then Facebook may want to get back down into these candles over here. I've heard a lot of talk here lately that, Facebook basing out, Facebook's going to be good. I don't disagree with that. I really don't disagree with that. The thing is when. I don't see why Facebook can't be up here at $486. But when? See, that's the thing. When? And we don't want to buy something and just wait while the sellers just beat the snot out of us. We don't want to do that. We want to buy it when it sets up for us. So here we've got this little wedge sitting in here. It would make sense that the setup would only be when the buyers broke out. Plus, we have this top up here. So wouldn't it make sense to be a buyer on this top? We don't have to pick a bottom. We don't have to do that. I love the whole buy low, sell high thing. I love that. Our parents drilled that into our head, but they forgot to tell us what the hell low was. What is low? Well, if Facebook was to get right here is pretty damn low. Pretty low. And so, anyway, make sure the chart is working correctly, and of course, make sure the market has your back. TNA, not for a long, but for a short. This does have potential. It does. It does. We'll see what it does, but it does have potential for a possible inverted head and shoulders. So I'm going to be watching that closely. But until then, the trend is down. So this could be a short until it's not. And then we have skin. That's ugly. On weakness, below the 200 period moving average, maybe, if somebody's looking at that. If it was to rally up a little bit, closer to the 2250 area, that might be an awful nice short up in there as well. So we're going to look at skin for a possible short. Target around that 1660 up there. Alrighty, ladies and gents, and especially Chuck, Fred, Paula, Brett, Jim, Chubb, Dick, Dan, and that is all the names I can see here. Thank you all for being here. I'll be back in about 20 minutes when this market is opened up, and let's see if we can have some fun and make a buck or two. You guys take care.